So we'll start off with ETH. We know that the ETH reaction to 1700 is still a big one. There's nothing really changed aside from the fact that it seems as though this is a stronger rejection so far. And the comparisons I will still draw to this region over here, which is the initial top at 3500, and the same structure that we received there is exactly the same structure that we are seeing through here. This dip down in the middle, here's the run up into the resistance region, here's the rejection from that. As you can also see within here, I think that the daily level at 1600 is really, really important. I really place a lot of emphasis on this level in here. I think that if ETH starts trading back below the 1600 and gets a daily close back there, that's where I can see us locking down a fresh resistance point. And so if we trade under here, I think this will be our resistance point, and therefore I think that sets up very, very poorly overall for, you know, the structure of ETH around this rejection here. I don't see us moving to the 2200s. I think that's too aggressive. You've got to overcome this 1700 level first. It's such a huge level, and it just, you know, ETH right now can't get past it. And we've seen plenty of selling in this consolidation region over here. Again, look at these, you know, flat closes all the way below 1730 every single time. So I think if 1600 goes, the problem that I have here with the kind of the 1600 level going is that I see no reason why we shouldn't be targeting, you know, back down at the lows, you know, back down here. So like the 1200s, I think you would put back on the cards, and then it really depends on what structure this is going to take. So I think the mindset at the moment has kind of been locked into, like, this has to, it's like moon or doom all the time. So I think that the rally that we've seen, it's almost as though it's like warming people up to another bull run. I think people are starting to like it. It's almost as though, you know, like if we get past this, it could be another bull run. I think the likelihood is that we stay in a larger range for a period of time, so we don't actually get this kind of, you know, clear bull run scenario. I think that would be kind of lower down the list of things that I would expect here. But if we start trading back down here, then we start to see, well, okay, well, what does a range look like? If these are the boundaries of a range, then what does the range look like? You know, is it this for the next, you know, 6 months? Does this take us till the end of the year? What does this look like? I think that's a far more likely outcome than it is to be expecting that to be the play here. The other thing that's a concern, and something that I spoke about actually in the Haven discussions, is like, are we simply falling prey to good market conditions? So I'll tell you what's happened. During the rally that we've seen off the lows, people were starting to look towards, you know, the 1700 region, the you know, the kind of the resistance there. And then as soon as ETH carried on showing strength, we started to see targets changing, right? We started to discuss 2200. Twitter started to discuss 2100, you know, all of those different kind of higher target regions, like 20% past the resistance. And I wonder whether or not the kind of psychology of the market has kind of turned, in that people started to move the goalposts towards higher targets when we hadn't actually yet overcome the very first target that was in front of us at 17. So I think that's been a kind of an important thing, is how much are we falling prey to the good times of the market and moving the goalposts for higher, when actually this is the perfect bearish macro retest for ETH, and therefore should be given a huge amount of significance in this region. So that's one thing I would say. 1600 close below, I think it's a really poor sign for ETH. Right now, we're coming down underneath these lows, and, you know, we've taken out, I'm sure, a load of stops underneath here, but it doesn't really look as though this market is in a position for stopping here. If I simply went on like an RSI perspective, we've got a rejection at the 50 and then a fresh push lower. So if this candle closes red here, I would expect continuation to the downside. And the same with the 4 hour. You know, we've come back up here after selling off. We've got the bounce. This is going to be our lower high region. We've run straight into the resistance region here, and we've got issues straight away. Right, rejection here, starting to turn around, and then impulse lower. And then I think lower time frames, you can also begin to, there's 2 levels in here that you can use on kind of the lower time frame level. And all we're doing, which again is a concerning thing from a bullish perspective, is we're just tapping into supply and rejecting. So yesterday, last night on the open, we just tapped into this resistance region here, and I was kind of discussing the fact that this is our flip level. So what you've got is like this level in here was super important last night because it set the basis for the day. So we got the big rally off the lows on the open last night. It was a really strong open for the majority of markets, and we ran straight into the untested resistance region here at 1650. Now that's your basis for the day. If this is your first resistance region, if your alts and ETH can overcome this, it sets up really nicely for a green day. If they reject off this level, that sets you up for a pretty poor experience, right? Because first resistance, lockdown, sell-off, fresh low created. So not a nice structure. And then what we've seen today is, if we go down to the 15-minute, again later on today, is we've seen another little cluster created over here, and then ETH just tapping into that today on the rally from the US Open, and then rejecting heavily again down to another fresh low. So it's very much like a bears are in control picture that's being painted here. And then if you couple that with the fact that the 12-hour looks like a piece of shit, right? These highs here diverging. So you've got the nasty 12-hour divergence, the huge slowdown in momentum into the most hugest of dick size levels that you can imagine on the ETH chart, and you drop momentum like that into it. That's a really negative sign. It matches again exactly with the 12-hour top here with the drop-off in momentum that we saw back in April, May. It's a very, very ugly picture. And it's a picture that I wouldn't want to be a dip buyer for. Now, the bullish side of this, or the slightly bullish side, right? It's a mixture. It's a mixture here. There is a chance that ETH tries to pull this. This can support it, right? And we could actually triple diverge this region. We clear the highs at 1790. We'd pull in a load of fresh buyers who would assume the 1700 level broken. We'd maintain the loss of momentum, and that would be our top. So that is still an outcome, I think, for ETH until it breaks below 1600. I think once this level is lost, I would be a lot less considerate for a third leg of any divergence structure. Until 1600 is lost, there's still a chance the market can pull it. So that's the ETH picture, which I think is pretty clear. You know, it's pretty like cut and dry. The 1700 is very important, and you know, the picture is clear. What's the bullish picture, if so, for ETH? Well, the most bullish thing that ETH can do is it can drive for a third high and break the divergence structure. That is by far the most bullish thing it can do. So it needs to push above 1700, it needs to hold above 1700, and then it needs to get, it needs to break clear of the divergence structure. And it does that by showing strength to the upside. So 1700 flips would lead to the potential for the divergence structure to break. But again, it's a real, like that is a real, you're taking a real shot at that happening here. Again, into such a significant level. I think BTC is the really, really interesting one. So I'll focus on this area and then we'll zoom out. And again, this formed part of a lot of discussions that I was having last night. All right, so lower time frame BTC, and again, you know, this is the level like ETH that set the scene for last night. This is the important level. This was the bearish retest after the open. So we opened here, we rallied up towards this 23,200 level, got rejected here. Stronger sell-off, bleed throughout the day, US Open pump, and then back down here to the lows. So this is your basis. If you want to be bullish on the markets, if you think the markets are going to move to the upside, I would absolutely wait until 23,200 is flipped. The same with ETH at 1650. Like, if you want to be bullish, wait until the market shows you the signs that it has strength. And those levels, flipping those levels, are going to be the key points for you. 23,200, 1650. If the market can flip those levels, given the rejections already, then you've got some strength to run on the back of, and you can start looking for plays up here. Until that happens, fucked. Right? It's a very bad situation. Now, this chart is okay. And what we were doing was we were looking at the presence last night of, you know, the importance of this move here. So this was the established range we've had over the last, 4 days or so. We swept the highs here. We moved back up to the top of the range here, and then we sold off heavily back towards the bottom of the range. In terms of seeking liquidity on the upside, that has been established and that has been done. So we've hit the top side. Right? We've swept those levels, and we've had a very strong negative reaction to doing so. So the next thing, even if we were just thinking in terms of kind of, range-bound environment, the next thing we would be looking for is when are they going to take the lows? And I know a lot of people yesterday were looking at this cluster of lows around this 22,600 level. Untouched. Untouched lows here, untouched lows here, and now fresh lows again here. So if we do the downside sweep, then we would be expecting at a minimum to take out this level down here at the lows at 22.6. The concern I have with that is if I continue zooming out further, because I think when you zoom out further, it becomes even more uncomfortable, because if we now attack this region, then we'll attack this region, which means we then move into this empty gap space, right? So it's like it's a really poor situation, because I think if this snaps, then I think that we get the rundown here. There's very little in the way here, and we've got all of these lows underneath here that haven't been run. And I think that if we start to break, I think it will go relatively quickly to the downside. So you see the way we stayed zoomed in on this region, but as we start to zoom out, I think the picture looks worse for BTC with a failure to hold here. So that's where we are, right? I think that you've got some really good lower time frame triggers. I think that your reclaim of 23,200 is very important. I think that on the downside expectations, look, best case scenario is you try and run 22.5 and you recover it very quickly above 22.7. Failure to do so, and this is going to shit itself down into the low 21s, I would think. And that's keeping in mind, again, like we're looking at lower time frame BTC here, but that's keeping in mind that this is also an ETH bearishly diverging market into the significant macro bearish retest, right? So we're not like fucking about with this in terms of the higher time frame picture does not look good. Our assumption would be on continuation to the downside. And after the macro bearish retest on ETH, I would have no other thoughts aside from aiming for the lows. So that's the picture. And apologies for coming out swinging with the bearish propaganda today. But I think that unless this picture significantly changes on the lower time frame, it looks like ass. And then also, all right, let's just do like quick higher time frame, like peak here, right? And we get a cleaner chart for this. But, you know, the higher time frame is still this channel. The higher time frame is still this. The higher time frame is still got the presence of sellers at the top of the channel boundary, and it's still going to have the presence of buyers at the lower boundary. But, you know, what's to stop that scenario? Yeah, I mean, like, I would change, obviously, based on the conditions of the market. But I think in terms of, like, expectations, if I'm shorting 1,700 ETH, which I am, then my trade goal for that is fresh lows. If the situation changes during that move, should I get it, then I'll adapt. Do you have any thoughts on BTC failing to follow traditional markets? It's like the whole correlation thing is just like a bit of a mess, really. And it's also difficult because we had some very good moves at the weekend, for example, on a lot of alts. And also BTC took a move at the weekend and then traded back into the range and then hasn't followed traditional. So we're sort of like breaking away from that 1-1 correlation that we've had. But we have still seen strength in crypto markets, even though they might be different to traditional. Could this just be an RSI reset on the daily? Yeah, so that could be a thought process that I think you could have here. Again, it's pretty decent at representing that. Absolutely could be an outcome. It could be an outcome. You would be able to get your lower time frame triggers in order to determine that and whether or not you could position into it. But absolutely, that is one element of this that could be the case. I guess the negative side to that is that there's a huge amount of alts that are also creating bearish divs. So there's a huge number of kind of bearish divergences developing on alts. There's a number of lower time frame bearish divergences developing. And so market wide, it's still creating a pretty poor overall picture. I feel the bear market is dying simply due to the amount of big red candles that get counted. I mean, I don't think it's possible to say that you think the bear market is dying. I mean, it is possible because you've just typed it out. But I don't think it's necessarily right that, like, even not this on the daily, to say that you think the bear market is dying when the chart looks like that. You know, there's nothing really that's changing here. And, you know, if you're now assuming strength just because this region here has had some red candle kind of cancelled out by green candle, isn't it way more realistic to say it's going to be a crab market? Well, why should we also assume that? Like, I don't think we should also assume crab market. Like, why don't we just assume continuation of the downtrend? Like, surely that should be the first thing that we would assume, right? Is if this is the current market structure, then why would the next move on a breakdown of this not be fresh lows? Wasn't the former lows chain reaction of many things? Wouldn't it be hard to beat that this soon? Not necessarily. Like a lot of people, you got way too much like narrative. You got way too much like this would be hard for the market to do, or this wouldn't be hard for the market to do, or like this would, like, you create way too many stories. You can just see that from like the chat discussions. Like just play the market. It's a downtrending market. It's still a bear market. If we start snapping down off this high, then we have to think about the chances of trend continuation versus... So people start talking about like, oh, there's no more negative news now. You know, all the negative news is out. US recession, interest rates, China tensions. Like everything's out. Everything's fine now. This market's still downtrending. It's just in the same way that the market didn't need good news to do this. The market doesn't need bad news to impulse lower, right? We might react heavily if there is negative news, but it's not like it needs some, license to move down from bad news happening. It's a downtrending market. It's just going to puke when it wants to puke. We don't get mega drops anymore, it seems. Like, again, you're speaking about a month of chop. You would have said exactly the same thing in May. There's a month here where you would have said, it doesn't look like we're getting any big drops anymore. And then we could do fucking minus 50%. So again, I just think that like thought process like that just isn't right in this particular area. Yeah, trad markets right now at resistance. So let's take a look at trad markets. They've been doing very, very well. And the Nasdaq's in a really interesting place. We'll cover that here. I really like the picture of the Nasdaq here. So the Nasdaq has created this divergence structure over here, and then it popped up for a fresh high, which is a really great sign usually for markets. Right? So we had this like clearly diverging structure here. Even this leg up, which was maybe Pelosi news here, and then instant reaction, just diverging the whole way through. And then structure breaks. Then the structure breaks to the upside. So it invalidates the divergence setup and it puts in a fresh high. The downside to that is that's also exactly what it did here. Divergence structure all the way up, popped up fresh, gave us a new high, broke the divergence structure, and that marked the top. So they're very similar regions in terms of the way that they are breaking through divergence structures before putting in fresh highs. And quite typically, this is something that these structures tend to do. They tend to move heavily to the upside, get rid of the structure, and then react. So it's just an interesting comparison. It's very similar to the way that we popped up for this fresh high here before eventually selling off again. Not saying history is going to repeat itself, but the structure based on the RSI is exactly the same. Hourly divs up here as well. Between the last highs here. It's got the hourly divs too. I mean, they're not looking super hot, right? But like I said, I think there's some really good levels you can map and play on the lower time frames if you are still bullish. Like, there's nothing wrong with that. How would you enter an ETH short on a break of the 1600 level, considering we will likely start moving down very fast? Market. Smash, smash, smash. Sell, sell, sell. Max lev. Slide it all the way up. Sell, sell, sell. Keep clicking. Watch your entry just sliding down with price. Pray that it doesn't retrace. Second ticket was OP. Let's look at OP. That's a really interesting market to look at anyway. So classic bearish divergence setup, and I think we discussed this one on Sunday. We talked about the potential for kind of the $2 region. OP had just pushed way too close to $2 and stopped just shy of it to kind of really give any strength. I think that the top was in. It's kind of one of those like baity setups. It pushes lower, but when you stop at like 195 in a very aggressive market, I think there's always the risk of kind of the round number stops being run at some point. And yesterday was a very good day for OP overall. Really, really good day. Pushed into now the divergence structure over on the 12-hour, and also I think on the daily is going to have the same setup, certainly on the RSI, just not on the awesome oscillator. So pushing into concerning territory here. So if you have been long on OP, then I think you're absolutely fine in realizing profit at a point in time like this. You know, when the market is giving you a potential bearish setup, and one that has quite a lot of strength with the running of the $2 level as well, I think you're absolutely fine to think about taking profit on this. If you want to play the short side, it's slightly harder. It's a very clear setup. You've got a very easy setup. The trouble that you've got is that your stopping distance is a huge amount away. So if you wanted to enter, right now, then your stopping distance is pretty huge for this region, which makes the trade itself pretty awkward. So you can't have a 20% stop on this position because it's, pretty grim. So you'd have to come into the lower time frames in order to try and take a setup on this. And maybe you could try and come in at 202, the top of this 4-hour candle. But again, things start to get a lot trickier here. It has to hold here. I think so. I think that holding the highs at 183, 184 would be imperative for it if it wanted to try and continue to the upside. The other difficulty you've got with shorting something like OP is that it just has the ability to rip, like yesterday. It just has the ability to rip. And so it's also a slightly awkward market to be positioning for, because it can just show strength and take off, and suddenly it's taken off 30% in a day when everything else has been flat or gone down. Where would you take profit on a short? Well, where would chat take profit on a short? $1? Yeah, fine. 132, 174. I think 174 is like not far enough. I would just wait until I get liquidated. Yeah, I think the $30s are a decent spot for this. There's been plenty of interaction around this $30 level. It's back down to the low where we would expect it to try and hold up anyway. And then if it starts to plummet, then I think, closer to, $1.15, $1 zone would probably be the area we're looking for. The original breakout is back down here at 94 cents. So that's the original breakout level, and no technical retest for it, which again may not be expected given the consolidation period under here. But this is still one of the bigger breakout levels at 94. So I think it's an attractive looking downside play. It's just really hard to manage a position like this, an alt position like this, because of the distance of the stop. And yes, you can reduce obviously your position size. You have to accommodate a stop loss that's bigger, but there are better setups, I think. I think the main reason that people would want to short OP is because it went up a lot, therefore it has to go down a lot. And yes, that could absolutely be correct. I think the logic is kind of okay for OP in that regard. The problem that I think is the big one is that most people won't be able to stick the position. So what will happen is you'll just get chopped to pieces trying to short OP, and then you'll probably end up either liquidated, account drained, or so battered and bruised that you can't even take the setup when it actually plays out. I think long side, I think SNX is still one of the better markets. I think that Link is still a particularly nice looking market as long as it can continue holding this 730 region. I think this is still a fine market to be considering. So I think SNX and Link still remain kind of the better positions. And, ENS has ripped from this similar setup. It pushed to a fresh high from this same setup that SNX has got. We haven't seen the follow through yet on SNX, but again, it's still in a really good position from an RSI perspective. It's still set up really, really nicely. It's still sitting above the former resistance zone down here at 340s, and so it's set up really nicely. And I think the Link also, again, I think Link is kind of going under the radar, but I think that this daily setup is still quite nice if you are looking for long exposure. This is a market I would look at again for recovery. So we want to see strength up here. We want to see the recovery aspect for Link. But if it does that, then it looks as though it's a very nice market to move into. Are we looking for more upside on ETH back towards 1800? And if it holds, looking for 2100, or is that too optimistic? So I think the way that I would phrase that now is that is an outcome. That is certainly a potential outcome for ETH. I think that it is the furthest down the list. If number one is bearish continuation, loss of 1600 and traveling back down towards 1300 would probably be my number one. Number two would be chop here. And then number three would be a clear move to 1800. And then I think that throws in the potential for the divergence, which makes it awkward anyway. But I think it's absolutely an option that you should consider until some of the bearish checkpoints are passed. You absolutely have to continue looking at all eventualities for the market. And given the structure of a lot of these markets right now, that is absolutely something that I couldn't sit here and say I'm absolutely ruling out that play altogether. Can you comment on BTC dominance and what that means for you? No, it's a piece of shit. It's a terrible metric. Terrible, terrible metric that should never be used. So that's my comment on it. Chuck it in the fucking garbage. Never look at it. Ignore it. Would the Link supply zone around 8 to 9 be a concern? Yes, but we're not going to complain after a 10% move to the upside if that would be the case. You check Atom, yeah, it's exactly the same picture as everything else, right? Channeling here, so you got the channel underneath Atom, you got all of these lows that are being protected, you got the 3-day RSI reset here, the rejection at the 50 level, you've got the daily putting in a divergence between these two highs. This is another example of a market that's put in a divergence across the highs, both on the awesome oscillator and the RSI. See here, we'll focus on the awesome oscillator one for now as it's cleaner. So you get the divergence between the two highs that it's put in through here. You've got the nice diagonal underneath all of this price action through here. So Atom is another example of a market that absolutely could do this for another high here. It could absolutely continue the divergence structure, could do this, and then along with ETH and everything else, death. So Atom is a very good example of an alt market that is suffering after the last high it made. Yeah, Sol is the same picture on the 3-day as well. Channels up here. All these markets are doing exactly the same thing. XTZ, Sol, Atom, they're all doing the same shit. BTC, it's all the same structure. It's all channeled and then just waiting to see direction in terms of like larger break here, upside, downside, etc. 3-day reset. The Sol doesn't have any divergences. It just has weakness in the fact that this is a lower high. So Sol here would be trying to hold up the structure below the low here. So the 36, 24, 25 area here would be where it would be trying to hold structure, because it doesn't want to create this as the lower high and then it doesn't want to put in a fresh low here. Because if it does that scenario, then obviously it's a potential puke scenario with a flip in market structure here. So it very much wants to preserve this, but it is a nasty sign on Sol that it does have the lower high here. One of the few markets that does, actually. There's not many of these markets that actually fail to create a higher high. Sol was one of them, unfortunately. Is Aave a good potential short setup? Aave, again, is like Atom, so you can see that even though we've got the fresh higher high in here, the awesome oscillator says that this is a scam. Again, just like Atom, this can absolutely go up for another leg here and still support that structure. And what I'm talking about when I'm talking about kind of, you know, the third leg higher, that's a really crucial point for swing short positions, but also for the breaking of the structure for bullish conditions. So we use Aave as the example as we're here. You've got the two highs in here, and you've got this drop off in the awesome oscillator here. We'll forget about RSI for now. One outcome here is this, where price does this, and so you continue the divergence structure across 3 drives and then you die. And this usually is a macro top signal. This would be a higher time frame top signal on markets that would attempt 3 weakening drives on the daily time frame. That would be a pretty strong signal of a market topping out for a, you know, certainly a very strong correction. The bullish case here, what you want to see is you want to see strength to break this structure. So you want to see a move that closes above the divergence structure. So it puts in a fresh high on the awesome oscillator. Along, obviously, it's going to be putting in a fresh high with price as well. That's what you need to see from a bullish perspective. That is less likely. That is a less likely scenario, but it's absolutely something that you should be aware of potentially happening. So if you're looking at bearish divergences, if we begin to trade higher, you're waiting to see whether or not the divergence structure is broken, in which case the markets are in a very good position, or you're waiting to see if a third leg is still going to diverge, or you're waiting to see if we even get a third leg. Yeah, isn't it the same setup on the Nasdaq that you showed, and it peaked after? Lower time frames. The higher time frame ones tend to be slightly stronger through these regions. So we tend to have clearer breaks and clearer pushes, and they cover significantly more distance, which means that they're better trades to the upside. Yeah, so Dublin, it's a good question. How would you execute a short if it kept diverging on the daily? What sort of trigger would you look for? Break of market structure on lower time frame? Yeah, so that would ideally be what you were looking for. Break of structure is one of the better ways to try and time a daily divergence short. So you want to be using like the 4-hour. And then if you start to see the trend break on the 4-hour, we would assume, you know, kind of a domino effect all the way up through the time frames, confirming our higher time frame divergences. So yeah, that's a really good way of looking at it. Is the ETH merge sell or a buy signal for you? Neither. Like, I don't really care about what's going on in terms of news and fundamentally what's going on, especially when it's nothing more than a gamble. You know, it's like just hit one of those buttons and there's a 50-50 chance that I'm correct. But so my decision making isn't based on what's coming up in terms of fundamental changes. It's purely based on what the chart looks like. What kind of learning resources did you use when you first began trading? Not a huge amount, to be honest. There wasn't really a lot of material around for the type of trading that I wanted to do. So a lot of it was kind of just like self-noting and stuff. I think just general educational shit in terms of understanding some of the trading terminology. But aside from that, not a huge amount of material. It was mainly kind of charts and noting and my own thoughts on things. Rose just diverging all the way across the highs here. So 1, 2, 3 highs here, just diverging across all of them. Not a great looking setup at all. Swept the highs of the range, locked in here still. So this is your range. This is your range high. We swept the top of the range. We're diverging now into the resistance at the top of the range. I would expect a correction from here. Matic, Polygon, all caps. I haven't looked at Matic in a couple of days. Yeah, no divergences for Matic. It just swept the highs here at 98 into that above $1 region, which means it's getting into this supply cluster here. It was pretty weak overall, but maybe again, if you wanted to kind of, try and do something in this market, you try and wait for a breakout of this region here. Still sat above this 88 cents region, which is okay. Ideal is trading above 91, so it's not that much value to give up in order to have more strength. But I think trading above 91, 92 is a safer play, especially if it comes with a breakout. BNB is just like weakening again on every time frame here. Even this hourly time frame isn't a great picture, but this is a good example of something to keep an eye on today if you want to discuss or think about more about the awesome oscillator divergence structure breaks that I spoke about. BNB is probably the best lower time frame example that you'll get. So you can see here that we're losing momentum into these highs. We've got 3 higher highs here. And we so far got 3 lower highs on the awesome oscillator. So again, BNB is either this is the top and we're going to sell off down here, or we're going to break clear of this structure and we're going to impulse higher. So this is absolutely a really good one to watch if you want to kind of see what one of the setups that we were discussing from the higher time frame, things like Atom or Aave, look like on a lower time frame scale. AR is one of the better market structures. Yeah. The higher time frames look actually pretty decent for it still. I mean, it's got a whole 1350. If it starts losing 1350, it's back down to 1245s and then potentially worse. I've been watching a meme trend line on ETH and BTC daily charts going back to January 2021. Let me see if I can map out the same one as you. Let's see if we can do this. Oh shit. Oh shit, look at this. You figured out the market. This could be it. This is like the fucking Enigma code. You may have cracked the entire market here. Listen, I'm not gonna say to you that this is some low IQ garbage. I like this a lot. I like this a lot. Look at this. What were you doing on the day you decided to draw this trend line? Like, did this just like catch your eye? Like, were you just like, wait a second, like there could be something along these highs? Listen, it fits. It fits. I can't go against the fact that it fits naturally. But yeah, I don't think you're crazy, or maybe slightly crazy. But I don't think you're low IQ for doing this. Honestly, I'm just surprised that you saw this. That's all. Yeah, I'm just surprised that like you caught this. That's all. What have your reactions been? All right, let's take this one step further. What have the reactions been to hitting the top of this level? Okay, so top here. All right, that's a decent correction. So that's 35% sell-off. Oh lord, he's caught the top. 58. All right, this one's a bad one. You didn't really capture much here. 13. Oh, you got the high at 35. All right, so what we got here? Let's say 90, 100, 175, 105, 43% average. Back down to the bottom of the range. I knew it was going to work out. Is literally this is the information that Wall Street did not want you to know. I will promise you I will keep an eye on that trend line. Also, thank you very much for bringing it to my attention. That was a great piece of... That's like the best TA you can do. So market's just all continuing to chop around these lows, not really doing anything substantial, just trading back to the lows, getting a strong reaction. This region has been defended pretty well so far, and again, I suspect it's because of the significance of what lies below this region in terms of stop loss, stop loss, stop loss, stop loss, liquidity, 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 liquidity. So seen a pretty decent defense so far, but if this level provides the same drop, I think that's the only difference. I think that's the only difference is I don't think this level provides the same continuation aspect. I think that it, I don't think it goes down as far as, in terms of percentage terms as it did after the 3,500 high. I think we're more likely to kind of come down to maybe the bottom of the range, maybe somewhere slightly above it and chop again and consolidate for a while. If you're short on ETH at 1,700, what's your stop loss? Do you close the trade only if the bearish divergence framework is broken? Yeah, ideally. Ideally. I think I could get other clues from the ETH chart, like the recovery of the lower time frame levels in order to make a decision earlier than the higher time frame that my position may be under threat. But I ideally don't want to be out unless the divergence is broken. You think we've seen the bottom? No. I think most alts have bottomed or are bottoming. I think that the concern is like that period of time can be fucking ages. I think we've put in really good highs. And if you look across the majority of markets, again, kind of if we eliminate the moon or doom scenario and you look at things like CRV, it's like, well, why isn't this just going to be our range for the next 6 months? If CRV breaks down here, then we're just going to enter this range again. So, things like this, I think what we're doing is I think that we've seen ranges being established. And yes, we may be in kind of a bottoming region, but I think everybody is still way too caught up in like, okay, this is the start of the next bull run. Here we go, here we go, here we go. And then if we go lower, everybody's going to be like, it's over, it's going to zero, it's fucked, it's all dead. I think that CRV is a good example of something that is probably a likely scenario, and we'll probably be here at Christmas kind of talking about the way that we've just chopped through a CRV range. So I just think a lot of these markets are top of ranges. They're top of ranges. We looked at Rose before as another example. We've looked at Sand. We've looked at Man. We haven't looked at those, but believe me, they're in exactly the same structure. Yeah, so there are a lot of markets that basically just represent this. Even with BTC, even though we're looking at BTC and we're saying, okay, well, here's the tight kind of, consolidation pattern that we're seeing up here. We've got the boundaries here and here. And then people say bear flag, and we just break down to the bottom of the range. Here's our high established, and then we just do this. I think that's probably the most likely outcome from here. Whether or not we take the lows or not, whether or not we take the lows on this move, whether or not we take the lows in 3 months' time. Sol, despite the bad news, holding up quite well, could be a sign for a bottom. I don't think we could base a sign of a bottom off reaction to news. Hopefully, I would love us to be in bullish market conditions where everything is super easy to trade. Crypto correlates strongly with tech stocks and could go much further down. They could go much further down. Again, potentially true. Would you scale in now for a long-term spot buy? No. I'm not going to buy this shit at resistance for a long-term spot buy. Certainly not higher time frame resistance. I'd be a buyer higher. If the market's going to go higher, I'll be a buyer higher because then the targets can be much more to the upside versus here. Yeah, Mana. Jesus, is going to try again. And Sand. Sand is the big boy, and Mana as well. Like they're both the big boys here because they're both really nice potential trades. They both are sitting on the daily RSI levels, and so that's a real positive. They're both sitting on really good daily levels in terms of RSI here. Just perfect little setup levels. And Sand is particularly juicy because it's just got one fat level across 145 that it can't break through. All right, listen. You don't want to play Sand or Mana, so don't start smashing market buy. Don't be fucking plebs here. Yeah, BTC probably just going to retrace everything, right? It's probably like a little pump. It's probably going to... Yeah, it's already dead. Just taking the highs here and now it's dead. And now everybody's stuck in ridiculously leveraged fucking Sand longs. And remember, sand is a world that has 12 active players. So just remember, when you're buying this, there are 12 players in total. And so, you put what, 9-figure valuation on it for 12 players. This is probably nice as well. Pretty decent point in terms of reactions above and below. Oh no, look at Zach. Are we really doing this? This is I think this is the same sort of structure, I think, on the higher time frames to sand. Yeah, it is. Same structure here with the daily RSI. Breaking through 67, 70s, and then you got the gap up towards the 80s. Zach has been in the same kind of position for a while. Do you think ETC could print another high? I think that all markets could potentially print more highs. And again, that's still an outcome, not just specific to one or two. I think all markets have the potential to do it. Whether or not it's on enough momentum for us to consider it as significant or not is to be decided. Can you cover curve and convex, not only TA, but also tokenomics and use cases? Absolutely fucking not. Is it time for Ape to die yet? Maybe. I'm not looking at the chart deliberately because I don't want to explain my thought process for Ape. But it's representative of some of the divergence structure breaks that we have discussed on this stream. Looking forward to sub $1.08. Yeah, me too. Let's go back over to BTC. We know about sand now. Yeah, it's pumped. Yeah, everyone's scamming it, whatever. Low time frame, decent recovery. Pick your poison, all pumping. AXS, Mana, Sand, Alice, ENJ, Render. Yeah. The better options are still Mana and Sand because they're really, really juicy levels above us of resistance. They're super clear in terms of potential breakouts, and then they should also be super clear in order to take profit on. They're just slightly better markets in terms of flat levels for making decisions for breakouts, etc. Take a look at Tron. Absolutely. Yeah, same setup. Basically, it seems like all the alts that are in this particular setup here are bouncing. What do we look at? Sand, Tron. What was the other one that had this at the same position? Zach, yeah. Good memory. Yeah, Zach. I never would have fucking remembered that. Yeah, Zach, another one. You dump your net worth into silver. Not quite net worth into silver, but I'm positioned for silver. ICE is 30 cents. Is it really? That's one ticker from, back in the height of the bull run. That's one ticker that I don't think I've looked at since it was probably up at those levels. So this is the lower time frame resistance area back at 23,000. So it'd be interesting to see if BTC's got the strength to try and push through here. FTM going? Oh no. Fresh highs as well. Breakout of 35. Good setup. Did someone mention this earlier in the stream? Because apologies, this is a nice breakout play. Rotation here. Good. No divergence between the highs, which is also another positive. And daily setting up for higher. It's pretty decent. Yeah, it's amazing how a 17-year-old out-traded everyone in Joule. It was a very, very good trade. It was an exceptionally good trade. But it was also... It wasn't just a trade, it was also an acknowledgement. The best thing about that decision-making process, well, that is the best thing, was the decision-making process. The fact that the decision was made that it was an insane amount of money, and regardless of whatever the future would hold, at that point in time, it was a significant sum to take profit on and convert into cash. And that process, that thought, is incredibly good to have. So many people, I guess, looking back now, would wish that they had that thought process about some of their bags when they had the profit they did. And so I think that's the best part about that is just the mindset of acknowledging the size of USD and saying, fuck, that is plenty, thank you. Oh my fucking god, Robdong's here. I waited all stream for this. And joins with 10 minutes left? It's just like walking in late to the party so everyone notices you. Hazaka leaves, Robdong enters. Yeah. I think people talking about max pain, I think that max pain is to pump into fresh highs and that be the top. The kind of the environment is supercharged already, and I think that the max pain is pumping the highs. I think that flips a lot of bears. I think a lot of bears will be like, oh shit, I was wrong. I shouldn't be short on this. And then we pull in a fresh load of buyers. And then I think puke. That would for me would be max pain. Yeah, good recovery. Straight bounce off this. And another high. Try and do the triple here. Great recoveries here. Really looks as though it's like just a continued punishment of kind of early red button presses. Yeah, I see a lot of people waiting to enter spot too, but haven't. Will be max pain for them as well. Yeah, I think it starts to force a lot of people if we push the upside again from here. I think it starts to force a lot of people's hands in terms of how they should be positioning. Yeah, sand at the level now. So again, this is really like this level should be holding. Can you speak a little about confirmation candles and or signs when testing SR areas? I have a hard time discerning when to long as it surpasses resistance. Well, you don't have to overcomplicate it. If you're looking for something to break resistance on the 1 hour time frame, if a candle breaks through the resistance on the 1 hour time frame, you get long. Like it's not a complicated thought process. And we overcomplicate it by looking for like micro signals or micro confirmations. If you're looking for a breakout and you get a breakout, you play the breakout. You wait for the candle close, yeah, on your time frame of choice. So if you're looking for a 4 hour breakout of a level, then you're waiting for a 4 hour candle close above that level. If you're looking for a daily, you're looking for a daily. Now, there are some times that you can obviously kind of front run that thought process, and you can use lower time frame signals to anticipate a breakout, or at least give you a higher likelihood chance of playing a breakout early. But that is certainly a more advanced line of thought. How do you pick the time frame? Well, that's your preference, right? That's your preference on time frame. So where do you like to trade? Are you a 5-minute trader? Are you a 4 hour trader? Are you a daily trader? You know, where is your personal thought process? Yeah, 1 hour and 4. So there you go. So you got your breakouts. 1 second trader. I mean, look, you got to be more aggressive, but you still got your breakouts. I think this is probably one of the better markets to be watching today. Hourly on sand. Yeah, it doesn't look great. But there's still 30 minutes left, so while it doesn't look great, there's still over half the time remaining for this candle to actually close. So I'm not going to talk too much about it because I have my views on this market in general. So I won't speak too much on sand or other related shitcoins. So I think there's some really good lower time frame levels to watch for. I would be super concerned on BTC below 22.6. I think that's a really concerning level. I think ETH daily closes below 1600 are also a very bad sign. I don't like the look of the market. I think there's a lot of divergences. I think there's a lot of higher time frame ranges kind of being run into. I think that we correct. The thing that I don't know is if we correct off the levels that we're currently at, or whether or not the correction comes after a potential further leg higher up. But I do think the correction comes at some point. I'm not going to be a dip buyer here. If I want to get long, then I'm going to use the lower time frame basis of some of the reclaims of these important levels in order to do so. But apart from that, I'm kind of just going to sit on the sidelines and wait for the market to make its mind up on the next direction. Sand, mana, metaverse stuff is probably looking some of the juicier kind of plays. It's got some of the clear lower time frame levels already in terms of what you can consider as breakouts, flips, retests, whatever, right? So there's some pretty clear levels in there you can use. BTC's got some nice levels as well, certainly around the 23,000 mark. Pretty good level to use as a basis for entering positions or not. Coming up to the weekend, close tomorrow for traditional markets. May see some de-risking into that. May see some profit taking off what has been another very good week for traditional markets. So just be aware of, you know, the overall picture and the fact that BTC, despite holding up here, is still really just chopping around the bottom level of this region, which if it starts to fall, may fall quite quickly. So keep it in mind. And I'll be back on Sunday. So literally 3 days away. I'll be back on Sunday. So have a wonderful weekend. Enjoy the next few days. Good luck trading. I hope everything works out well. Don't get too carried away. Don't get too caught up in like a super strong bias. I think this is a time to be relatively fluid in terms of your bias. Appreciate the conditions on both sides. Appreciate what it would mean to trade higher, especially if it's done so under a loss of momentum again. And stay fluid and move with the market. Thank you for all the chat today. As always, incredibly entertaining. Just as much fun for me to read as well. So thank you for that. Enjoy the weekend and see you on Sunday evening.